Shares of Bank of America are trading higher after the bank released its third quarter results, which exceeded analysts' expectations, citing stronger than expected investment banking revenue. Also, shares of Morgan Stanley are trading higher after it posted its third quarter earnings that topped expectations by the largest margin in nearly 5 years. Let's bring in Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners. It's good to have you join us today. Thanks for taking the time. Okay, I cannot hear you. I'm wondering if maybe our viewers can't hear you also. We're just going to take a quick check to see if we can hear.
Can you hear me now?
Jonathan. Mr. Corpina, can you hear us now? Just
How's
want to
this?
check we can hear you now. Perfect.
Yep.
Okay, so thanks
Great,
for joining us.
Good morning.
Yeah, it's always good to get a quick tech check. Let's start with Morgan Stanley when we're talking about bank earnings coming in today, because Morgan Stanley topped expectations by the largest margin in nearly 5 years. Were you surprised by that? What are your thoughts?
Not really, and kind of the similar theme that we've seen from the other large financials, and also a similar theme that we've seen from previous quarters, right? So coming into this year, we've been waiting for M&A activity to pick up, syndicate activity to pick up. We've seen trading activity clearly pick up towards the end of last year, continuing into this year. That all helps top line and growth for these large institutions, and we're going to continue to see that. We're in an administration now, almost a year into it, close to a year into it, that is pro-business and is kind of loosening some of the regulations as far as M&A activity is concerned. And I think we're at this point where the money that's been sitting on the sidelines, these corporations that have been holding on to cash, waiting to spend it, we're going to continue to see that spending spree move forward. We're going to see mergers between companies. We're going to see buybacks increase. We're going to see investments in infrastructure, investments domestically and internationally. We're going to continue to see what we've been seeing, and this only helps the financials. So what we saw from Bank of America, what we saw from JP Morgan, Morgan Stanley, it's kind of a similar theme. We were expecting this. The numbers that we are seeing are significantly higher than where we were expecting. We're seeing that in the results of the trading of the stock since then.
Yeah, higher than expected. Where do you think most of these boosts are coming from right now?
Yeah, I think exactly it's coming from these earnings, right? It's just like this activity that continues to pick up. We continue to see multi-billion-dollar mergers day after day, headline after headline. This money has been sitting and waiting, and I think we're going to continue to see this growth. So this theme that we saw the last 2 quarters, expect this to continue as we move throughout the year.
Okay, how could what we're seeing right now affect the next Fed decision in terms of maybe cutting interest rates? Like, how does that all factor in, especially the fact that we really haven't been getting much other data at the moment because of that continuing U.S. government shutdown?
Right, so we've got the shutdown. Data's been pretty quiet and silent about that. I think the Fed has all but committed to at least one other rate cut, and that's where the odds are showing us now, and that's what the market is pricing in. That comes out 2 weeks from today. What it does afterwards is going to be more interesting. Hopefully, we're going to have our government reopened by then, and we're going to continue to get some of this data that's going to be important. Right? Our Fed continues to say that they're going to remain data dependent, but there's so many factors that are out there. There's the geopolitical risks. We continue to talk about the trade tariff conflict that goes back and forth between us and other countries and the resulting yields of that. We continue to talk about interest rates and the implications of that. So the Fed, has all but committed to this one next move. After that, it's going to be a little bit uncertain. So I think what we have to do is kind of look at things in tighter time frames. Just look out now between now and the end of the month as your time frame. And then once we hear from the Fed at the end of the month, then we'll kind of pace that out to see what November looks like.
Okay, so don't look too far ahead. When it comes to banks, I take your point that you're expecting, the next earnings report after this one to be positive as well in the short term. But some analysts are saying there's still reason to be cautious, right? With everything going on in the world, you just mentioned it in terms of maybe a decision to cut interest rates, all these geopolitical factors. When it comes to the financial sector, what are some of the biggest risks that you're seeing?
Yeah, I think one of the risks is that if the Fed makes this cut now and then stays in a pause for some time, I think from the financial point of view that they are betting on and expecting for these rates to continue. From activity point of view, I think as long as we have this administration that is in place right now, we're going to continue to see this M&A activity, this investment banking, high earnings, this high trading, high volume. We're going to continue to see that while the Trump administration is in place. Move that down the road. Who knows what happens in the next election? I can't believe I'm actually talking about a next election at this point as we're so early in the phase. But I think we have that bracket now of what finance is going to look like. But the geopolitical risks that are out there, the inflationary risks that are out there, the tariff risks that are out there, those are going to continue. I think those can have impacts on all sectors. I don't think any sector is going to be immune to any of that.
I wanted to just quickly narrow in on tariffs. I know you just mentioned them, or the talk of tariffs, right? Tariffs in the headlines, even just that uncertainty. Like, how do tariffs and what we're seeing right now coming out of the U.S. maybe impact some of the big banks?
Yeah, we watch headlines, and one headline moves the market up 1%, and the next headline, same day, moves it down 1%. This continues to be a negotiation. We haven't had that major, if you want to call it a win in the Trump category of a tariff. He's had a few little ones here and there, but not the big ones. And obviously with China, we continue to go back and forth and a lot of negotiation and muscle flexing there. So I think we need to understand that at any given point, we look at the market activity just from this week, there is going to be a lot of volatility in our markets. It can pivot very quickly. When it does, be prepared to be able to make your move to get in or out, because when it does move fast.
Okay, really good to get your insight today. Thanks so much for joining us. Appreciate your time. That was Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners.